Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning on Friday, October 13th. So in the past week, there's been some good action. Up is good and down is bad. So the market has found something of a low, and we rallied pretty nicely off of it. Bonds have found something of a low. We've rallied, we've bounced off of it, I guess I would say. And more importantly to me is we have seen some a decent amount of growth stocks that had been holding up well, forming higher lows, things I talked about in the last video and some recent Cabot Growth Investor issues. We saw some of them pop higher, including some that really moved to new highs or really raced back to their highs. And to me, that's a good sign. It's not just the off the bottom stuff, the worst performing stuff bouncing. You're starting to see a little bit of leadership or potential leadership develop. Now, all that said, it's encouraging, but I just view it as it's a good first step or two. But let's see what happens from here. The intermediate term trend of the indexes are still down. The intermediate term trend of most stocks is still down. Even the leading NASDAQ is kind of hitting some resistance here at the 50-day line. You obviously have uncertainty now in the Middle East and stuff like that, in addition to the Fed and interest rates and all that sort of thing. So I just think it's, you want to be ready, you want to be flexible. I'm not looking ahead 3 months and saying this, that, and the other thing. I'm just kind of taking it day to day right now. I just think we need some more upside action. We need some more strength, more stocks participating, more indexes, getting over some moving averages, more intermediate term trends turning up to put some money to work. In Cabot Growth Investors model portfolio, I haven't done anything. We're still about 65% in cash. I could nibble, if we've dipped here, if we kind of firm up and maybe, perk up next week and some individual stocks look good, I could put a little bit of money to work, but we're just going to need to see, a lot more from the market and individual stocks here as earnings season cranks ahead to really conclude that the sellers are out of ammo and we want, a really big buying spree to take place. Okay, let's hop into the charts. As usual, I'm using a program called MarketSmith, great product from Investors Business Daily. You can learn more at marketsmith.com. We'll start here. This is the NASDAQ. Now, this is the strongest index, but again, like I just said, we've hit some resistance at this red 50-day line. It's not unusual for that to, in fact, it's very common for that to happen. So let's just see what happens. It kind of went from 13,000 to, 13,000, say 700. And now we're at 13,450. So, if we pull back in here and stabilize, let me clean up the chart here. But, if we pull back here and sort of stabilize and assault higher, okay. Obviously if we come all the way back to the lows, not as good. No rocket science here. It's just, so far it's normal. But you just want to see how it goes. More important to me is just the overall trend. You could argue with the NASDAQ itself, the trend is kind of sideways, and I'll be okay with that. But it's not up, you know what I mean? And, for this 25, first of all, we're kind of dipping below the 25-day line again. But we want to see for a lot of these indexes for our intermediate term model to turn positive, we need to see them basically higher than they were 5 weeks ago. Okay, so 5 weeks ago, ballpark was somewhere up here. So we either need to see this really strengthen, which, hey, I'm all for it. Or, maybe we come back down, fill out, and then, as late October comes around toward Halloween, we get going. We'll just see how it plays out. Right now, I would just say, I'm glad we got off our knees. It was a pretty good bounce. As I'll show you, there's a decent amount of individual stocks that are acting pretty well. Not that they're all up and out and running, but, they're there. They're ready to go if the market allows it. But we have to just see, more evidence of that. The other thing too is just more, that's the strongest index. Okay. Here's the S&P 500, couldn't even make it to the 50-day line. And, it's below the 25-day line here. Still not, again, I wouldn't say just on a very micro basis, the rally from last week is, a failure at this point or anything. But, you don't want to see it come all the way back here right quick. Okay. I will say when you look at the broad market or broader indexes, it's still a mess. This is the New York Composite. I guess you could say higher lows over time, but, not much doing here below everything. And of course, the small and mid caps. The small caps, IWM is, testing its lows from last December and March and all, the banking crisis and all that. MDY, not quite as bad, but same sort of posture. Okay. It just, the intermediate term trend is down. And, as of this morning, it's like 80% of stocks below their 50-day line. So we're still in that. I think, the bounce is good. The fact that we saw some stuff perk up to new highs is good, but we just need to see, more of it. Now, on the positive side, let me just run through some stuff before getting the stocks. Chips, again, I just view it as this was sort of the leading growth group, really the leading group in my opinion, for the year. Has this sort of double bottom base like the market. And now it's perked up. Even today, it's down. I don't know what it's down, but it's down 1% or 2%. But we're above the 50-day line, which is stronger than all the other indexes. Does that guarantee anything? No, but it's a good sign. You're seeing some of that perk up. The IBD 50 index, this is something you can only get on MarketSmith. And this is updated daily. So this red bar is Thursday's action. But again, you kind of have this double bottom action. We're starting to see a little bit of outperformance, from the growth stocks to the market. This index is basically, I don't know exactly, but it's basically like high relative strength stocks with good earnings growth, good groups. It's the pond that I tend to fish in. So, we're just seeing some of these early signs. That's a pretty good sign that, growth is leading. Some stocks are popping higher, so on and so forth. Okay. It's also a small positive. Again, this is very micro term, but this is TLT. This chart's hard to see, but just take my word for it. We had a low here last Friday after the jobs report. This is longer term bonds, and we're up a few points and, holding. The longer we can hold, the higher we stretch, the better. Okay. It doesn't mean we're, going up here. I hope we are, but, so far it's a start. Okay. IEF is sort of set. I think it's 7 to 10 year notes. Again, you kind of had a low here last jobs report last Friday, holding above that low. We'll see how it goes. Okay. So there are some positives in that. At the same time, there's just still, I showed you the broad market, indexes. I know there's news for this. This is the IHI, which is the medical device stuff. There's the weight loss drugs, which we'll talk about a little bit later, that are coming out that could be some of the biggest drugs in history, yada, yada, yada. And hopefully they're revolutionary. They could be. Maybe they change the world, for the better. I'm all for it. But, to me, when I see action like this, it's just more of a sign of the market. Like if this was a strong bull market and there was these great weight loss drugs, these stocks would not be doing this, okay? Like, over the last few months. So, IHI medical devices, biotechs are still XBI, new lows here yesterday. So on Thursday. And then, of course, even though interest rates have bounced right this week, not a huge amount, but, bonds have bounced. Interest rates are down 15 to 20 basis points. Here's like the ITB is just sitting on its lows, so there's just still a lot of, most of the market is still, I don't want to say in trouble. That means I think it's going lower, but it's not acting healthy right now. And if you just kind of take it day by day, I hope it could change starting next week. And this is a major low here and we start to perk up. I'm all for it. Like I said a few times today, but you kind of have to see it to believe it. Okay. So right now I just think it's, some nibbling here and there, nothing wrong with that, trying things out, seeing if some breakouts stick. There's nothing wrong with that, but at the same time, I think for the most part, patience, being cautious makes sense now, while at the same time being flexible and, having your watch list ready in case this does morph in to the real McCoy. Okay. Now the good news is, we're starting to see maybe if the rally works, okay, maybe some themes coming. I've mentioned CrowdStrike. This is CRWD holding very well in here. This was last Friday when things kind of, the pressure started to come off the market. Some of these things really pop. So it pops to new highs, follows through, holding very well in there. You also have Palo Alto Networks. Again, it kind of moves to new highs, finds some selling today. Is that unusual? No, it's not. It's like the NASDAQ hitting the 50-day line and then backing down. That sort of action is normal, but let's see how it goes from here. I will say that the PANW here, new RP peak, this is relative to the S&P 500. That's a good sign. Zscaler, ZS, this was in top 10 recently. Again, moves to new highs, starts to sell off, but no huge warning sign to this point. Recent new RP peak a couple of days ago. So maybe, cybersecurity and some of this, maybe there's a little bit of a group move. I mentioned chip stocks. We've talked about some of them. Here's Broadcom, AVGO, $900 stock. I know you guys all love $1,000 stocks, but it's a nice chart. And it's a big liquid company, dividend and all that, but a little bit of an AI player and all that. And what I like is, again, you just saw a lot of these stocks that were, not that AVGO was the strongest, most resilient thing in the market, but, it was holding pretty normally in here. Nothing big. Basically went from 90 to 80, right? Equivalent. Bottoms out here. And then as soon as the pressure comes off the market, the stock races higher back to its highs. Now it's reversing today, but let's see how it goes. To me, that's positive action. Synopsys, same sort of thing. SNPS, broke out, raced to new highs, round number resistance near 500. So now it's pulling back. But so far it looks like below average volume. Again, it's a higher price stock, but let's just see how these go. You're seeing, so chip stocks, cybersecurity maybe, and then this one's kind of off the beaten path. Well, might be, but this is trucking. One of the big players, Yellow, went bankrupt. Okay, now these have had big runs, so we'll see. And they haven't really had a correction. This is XPO. So it kind of hits new highs, coming back in, but let's see how it goes. Can it find support, moving averages, that sort of thing? There's a few that look good. Old Dominion, ODFL, again, getting hit today. But again, it kind of hangs in here. As soon as the pressure came off the market, it rallied pretty nicely here, pulling back. So let's just see how it goes. But you're seeing some stocks that, don't get me wrong, if they pull back like this another few days, not so good. But if, right at this point, still acting pretty normally. Arista Networks, this one's been, if you look at the weekly chart, it was in top 10. It's funny, it tried to break out from this area, or it did break out, I guess, back in March, I guess it was. And you've just kind of had this down, up, up. Okay, so this latest area on the weekly chart you can see is just a little tighter, just the last few weeks. 200 looks like round number resistance, so we'll see how it goes. Maybe it dies, but if it does get going here, if the market stabilizes, this pullback is minor, gets going, so on and so forth, looks pretty good. PANW or PDD group, they call themselves now. Again, thrust higher, pulling back here so far, normal. Let's see how it goes. Does it pull all the way back to 196? That's probably not ideal. Not that the stock would be totally broken. Not really what you're looking for, though. But so far, looking okay. Not a lot of selling volume, that sort of thing, okay? Dell Computer, or I guess Dell Technologies. I mentioned this. It's sort of a value. It's cheap, 10 times earnings, but it's a value, but there's a little bit of an AI angle, servers and whatnot. And just net, it's just holding up very, very well in here, as you can see the 50-day lines, catching up. So we'll see how it goes. But to me, the longer it's in here, especially with the market futzing around, the longer it's in here, the better, the higher the odds it wants to extend higher. So here's NVO and Lilly. Let me go with Lilly's probably the one in the sense that it's an American company. It trades here. It's obviously super liquid. It's had a huge run. Okay, don't get me wrong. This is not like, the stock has been moving for a while. But, obviously the weight loss thing, there's a lot of hype about it. And, just more recently, we had this sort of breakout, NVO as well, which is a foreign company. But they both kind of broke out here in early August. They shook out with the market here recently, but then as soon as the pressure came off the market, zoomed higher. NVO actually had earnings or released some, I think, guidance today. But they're both super strong. We'll see what happens. Again, these are higher priced, especially Lilly's a higher priced name. But we'll see what happens. Here's a reversal today. But again, you're kind of seeing this action right here to me, obviously on good volume, good story. That's pretty powerful, just like we're seeing with some of these other names. The reversal is not unusual. You got this weekend worries with, I'm sure Israel, I'm not going to get into it, but all the war and everything. So, some pullback here would be normal. Let's just see how it pulls back. The less, the better, if it can kind of retain in there. But both of those are worth watching. Adobe, same sort of pattern. Again, it's not going to be your biggest mover. It's a big name. But, the thing basically went from 57 to 50. Okay, and then as soon as the pressure came off, it kind of like AVGO, raced right back to its highs, pulling back, so far normal. We'll see how it goes. AXON Enterprise is a little bit of a different situation, but just noticed, again, pressure comes off the market. The stock races to not all-time highs, but its highest level since May. Okay, it's actually very well sponsored now. There's 1,300 funds in here. It's always been a little bit of a weird performer, but this last 4 or 5 months does look a little bit more proper, and you can see the volume dry up here the last really 2 months, which is probably a good sign for the stock. So we'll see how it goes. And last but not least, I'm not a big fan of news-driven, like, Middle East war, oil prices are up, therefore oil stocks are good. Not a huge fan of that, but I will say that this is USO, which is oil, not really oil prices, but it's an ETF, so up today. I will say that you have like Diamondback, which is FANG, has gone ballistic on the upside here. Some of this is because there was a buyout in the sector this week. Exxon bought PXD, but clearly that's a pretty good sign. Cord Energy is another one, CHRD. And the charts aren't on MarketSmith. They're not adjusted for dividends, so there's been some dividends paid. So it's kind of out to either all-time highs, I think. Well, maybe not all-time, but it's probably dividend adjusted, pretty close to all-time highs here, CHRD. And then like RRC, Range Resources, this is more of a natural gas play. You can see sort of, again, the pressure comes off the market. That's the sort of action you want to see. Doesn't mean there's not going to be some shaking and baking here near term, especially if the market's still wobbly, but the longer it can kind of hold most of these gains, the better, okay? So I didn't even mention things like Nutanix. I mean, I mentioned a lot of names last week, Meta, NVIDIA, that look pretty good. So there's a lot of names out there that look pretty good, but I think it's just a matter of let's see what happens. The question to me is, it's not so much, is the market going to get going in 3 weeks or not? Or, we'll just let time tell us. I'm really just focused on like, hey, are we ready? Are we getting going now? Is it time to really put a lot of money to work now? And I would just say right now, no, because the intermediate term trend is down. What could change my mind in the near term, at least in a small way, is if this pullback that we're having yesterday, today, finds support. I'm not going to give you a specific level, but, find some reasonable support. And then we stabilize and then come higher, whether it's Monday or Wednesday, sometime next week. And you start to see some of these stocks, like a PDD or what, just to pick a totally random stock. But, this one's pulling back. It kind of stabilizes in here. And then, all of a sudden there's a big volume pop when the market rallies next week. So, that's kind of what I'm looking at now. But simply put, there's just more work to do. Even when you're looking at the NASDAQ, and this is the strongest looking thing out there, there's just more work to do. There's, we might just need, maybe we retest, maybe we have a whole new leg down. Maybe interest rates need to stabilize. Maybe we need to see what this war is going to look like for a couple weeks. We'll have to see how it plays out. Right now, I think caution's the name of the game. But like I said at the outset, I definitely think, now's the time you want to stay flexible. Not only are we, 2.5 years into the growth stocks sort of being a tough thing and a couple of years into a tedious market environment, but even intermediate term, we topped 3 months ago. We're 3 months into sort of this correction, if that's what you want to call it. So now's the time, especially with earnings season coming up, you want to be prepared. You want to have your list ready and be willing to add to the list. Because if earnings season does go well and some of these uncertainties calm down, I do think the market has a pretty good chance of getting moving. But as always, we have to see it first. Okay, as always, thank you for listening, and come by again next Friday for another Cabot Weekly Review.